Hey traders from around the world, this is Jerremy Alexander Newsome with Real Life Trading. I'm doing absolutely fantastic. So it is Friday, November the 9th. Hopefully you had a great weekend. I did actually surprise me with a small 2-3 day vacation. So if you sent me an email and I haven't replied to it yet, that's where I was. We were camping in a yurt, spelled Y-U-R-T, in a yurt. And spent 2 days on the lake. It did rain. The entire time was cold, pretty cold, so I didn't get a chance to do like any hiking or anything, but we had an amazing time. I mean, that's the way the weather's been in the southeast recently for the last few days. It's just kind of like Seattle. For all my traders up in Seattle, it's kind of cold, kind of dreary, kind of cloudy, but hey, it's all good. Let's check out the market today. We did finally get a little bit of a pullback. Yay! I'm ready for the pullback. I like the pullback. This is the SPY that tracks the Standard & Poor's 500. And again, my overall thoughts, really there's going to be three places I think that we could bounce. And just kind of throwing this out there, that this particular setup for me, where like the buying the bounce, these are going to be kind of more like a longer term thing for me. When I say longer term thing, I mean, 6 months plus. And then again, I'm not a financial advisor, but depending on your age, how much longer you're going to go from there, it's entirely up to you. But I will say that around 205 on the SPY, I think it'd be good. One other short-term area to buy. 202 for me is kind of like my key number. Like we hit that spot, I'm bullish. I like it. I'm ready to buy. And I don't think we get back down to 196. But if we do, I'd be buying at some at 196. And then obviously we make back down to here. I'd be buying some there as well. That's longer term for me. Now, longer term perspective, I do expect either 205 or 202 on the SPY to be the location that we bounce at. So for my longer term traders or investors out there, if you if you're younger and you did get scared and you sold during the healthy retracement of the market and you're looking to buy back in again, that could be a location that you could. That could be a location if you want to add to your investments. Again, I'm not a financial advisor, but overall, I like any kind of pullback that we get. Here in November, I think holiday sales will come out, be pretty nice, pretty robust, and everything will be back to normal, and the market will kind of continue up higher. That's just my guess. That's what I think. I think there's a lot of similarities to 2011. We might kind of trade down here, do something like this, break a little bit lower, and then bounce. Again, in that little gap right here, this 196 area. I'm not going to be afraid of that. I'm going to be bullish. I am bullish on the markets long term until we break these areas, which is about 187 at this point. Long term bullish. I'll stay and remain there until that happens. So anyway, we're back up to where we were, folks. Retracement over, and now kind of pullback, I think, would be a good buying opportunity for those who did not get a chance to participate in that little bullish thrust right there on the SPY. Here's the DIA, which is the ETF that tracks the Dow, and pretty much the same thing there. Nothing really shocking or overly unique. What is interesting, I haven't talked about gold and silver in a while. Where the gold's at? I want the gold. Show me the gold. A lot of people, as far as analysts, were going bullish on gold around the 113 area. And here's why. I'm not saying that, it's not going to happen. I just didn't think it was. A lot of people were saying, hey, it's a big double bottom on gold, right? And there was a close above the neckline. Well, I agree with that. But if we go out here to a weekly chart and we really, really zoom out and just kind of take all this in, this little perspective in here for just a moment, here's what I'm seeing, right? I'm seeing we broke through some major supports, and we've been battling these supports as old supports, new resistances. And we also broke through this major trend line a long time ago. So I think we make it back on GLD to 970 at the minimum, maybe even a little bit lower. So on gold and on silver, I have been wanting some lower lows to happen before I personally start doing my best to buy some physical metals. With silver, could get down as low as $10 an ounce. I know it sounds crazy right now. It's already pretty low. It could go a little bit lower. And if that's the case, buy low, sell high on silver. It will get boring. It'll look a lot like this, right? There'll be 3-4 years where no one will be talking about silver. That's the time, in my opinion, to be loading up on some physical silver, when it's cheap. Buy low, sell high. That's just good long-term investing, in my opinion, on a metal that we know is not going anywhere. Silver and gold won't disappear. That I can assure you. They always will have intrinsic value in some level, in some form. Zombie apocalypse comes, you can trade out a gold bar for something. That, I guarantee you. You hand them an Andrew Jackson, maybe, maybe not. Probably not. Maybe some gasoline, maybe some water, maybe some gold. If Waterworld happens and all the ice caps melt, Kevin Costner will be here to save us, and we're going to be trading dirt for materials. But, it's all about perspective. Don't know why I'm going on a tangent about 1990 blockbusters, but regardless, all I'm going at is I think that metals have one more thrust lower because I think the dollar is going to go a little bit higher. If you guys want me to go into a really random tangent here for about 2 minutes, I think that there's a really good chance that the economies, and I say the economies in general, the United States economy is about to experience a very, very robust time. Now, a lot of people look back and say, Jeremy, the last 5 years have been very, very bullish on the economy. And I would say yes, but a lot of people don't realize it. A lot of people don't know it. It's already happened, right? They're just now getting over the fear of 2008. And as equities and the dollar potentially approach in some pre-2000 levels, right? If the dollar starts, notice this will move, boom, trade sideways. If we break out again, let's just think for a moment. If the dollar goes up, right, equities go to the highest point they ever have, metals are at an all-time low, people at that point will really start being and start buying into equities, buying into positions, especially if negative interest rates become a thing. I don't think they do, but if they did, a lot of people would be taking their cash out of banks and putting it into equities, which would cause a mass bullish panic. A lot of people wouldn't know it's a panic, but a panic is when you go to Thanksgiving or you go to Christmas and people you don't know, friends, family, high school relatives in your 10-year reunion say, hey, Jeremy, I'm thinking about buying this stock. What do you think, right? When random people bring up conversations about buying stocks on planes or in grocery stores, that's when you know the general public is in a panic. And we have not had that yet, in my opinion. That's why, in my opinion, I don't think the markets, and I do mean the U.S. equity markets, I don't think the U.S. equity markets get a massive sell-off like the ones that all of those email people you subscribe to. I don't think that occurs for a while. I think we get something like this. We get a giant bullish parabolic. The economy couldn't be any better, minus the $18 trillion in debt. Everything is fine. Everything is all excited. And then a little bit of a bubble burst. I think that's where we're going. Maybe I'm wrong. Maybe I'm the only bullish contrarian out there. But in my opinion, that is exactly what caused this to happen, which was 2007. And that is an extreme bullish sentiment. Same thing that happened in 2000 with the tech stock crashing. And I think that there's a lot of similarities between tech stocks now and how they were back in 2000. Amazon, very similar 2000 as it is now. Bigger company, but balance sheets show very similar numbers. It's interesting, ladies and gentlemen, but all I'm saying is if you do learn how to trade, you can protect yourself or prevent or benefit from any type of market. Up, down, or sideways, I'll teach you how to make money, ladies and gentlemen. That is what real life trading is all about, to enrich lives. I'll see you Wednesday in the next stock review. And until then, remember, love life, live life, and trade. See you.